Hi everybody, it's Marcus Collins from MA Properties with another market review. We're doing these on a regular basis, covering different towns in the greater Boston area, and this evening we're going to be talking about the town of Belmont. So, a Belmont market review. What we do in these reviews, we take a look at what happened in 2021, and then we kind of get our crystal ball out, if you will, and take a look about how the market's going to change into 2022. We've got 2 months worth of data. It's not really enough to make some serious judgments, or accurate judgments I should say, but at least we can give you a sense of exactly what we're doing. So with that, let me get this started and let's go with the market review. So this evening what we are going to do is cover the area, but before I do that, kind of a little bit of an introduction. It's relatively easy to get information today, and there's a lot of it out there. Much more difficult to make sense of it though, and actually key, of course, is to use it to your advantage. So this is why we at the MA Properties team look really closely at the market. Lots of statistics, as you'll see in a moment, as we look at what's happening in the Belmont market. And so we really want to, give you that, not only just show you the data, but give you what our perspective is, our analysis, if you will, in terms of where this market has been, and more importantly, of course, where it's going to go. You'll see a lot of information on the graphs this evening, on the presentation. Where can you find this? We have lots of information on our website. maproperties.com/statistics. Lots of information, about 20 different types of statistics in the area for the homes, for the towns in the area. About 50 towns worth of data. Inventory levels, absorption levels, average prices, home sales, you name it, the statistic is there. We're always expanding it, so we have an awful lot out there. So there's a lot of information on our website, say for about 50 different towns. So if you're living in Belmont, or you're thinking of moving out of Belmont to another town, take a look at the data that's there. You'll find that there's a lot of information for towns that, if you're moving into the area anyway, you'll find we've got much of the data for the important towns in the area. So this evening, let's take a look at the agenda. First thing we're going to look at is single family, and then we're going to take a look at the luxury market. Now, we define the luxury market as home sales over $2 million. So if a home sells for over 2, then we count it as a luxury home sale. And then once we've done that, we'll take a look at what's happening in the market and what our predictions are for 2022. So first thing, single family homes. First graph I always like to show is the inventory level. Now what this is a snapshot of how many homes are available to buy at the first of the month. So every month I go out and say how many homes are there to buy. The absolute number is not particularly important. What's important here is the trend, and you'll see that with much of the information that I'll show you this evening. It's really looking at trends to see which direction those trends are heading in. Now what you can see with this 10-year view is right back in 2012, a very high level of inventory, high levels of inventory. What we're seeing here is the tail end of the recession, the housing correction, if you will. That's what's kicking in. It kicks in 2012, we see high inventory levels, and then it's almost like there was kind of a light switch went on, and inventory levels dropped in 13 and have continued at that relatively low number ever since. And what happened was buyer confidence returned. As I say, literally as if there was kind of a light switch. Buyers came back into the market. They put the housing correction, the recession behind them, and they started focusing very much on what was happening today and the future. And so they came back into the market. And no matter which town you look at, it's usually around 2013, sometimes a little earlier. Usually those towns which would predominantly have first-time home buyers in there, they came a little earlier in 2012. But most towns 2013, and then we've seen these relatively low inventory levels tracking all the way through. You can begin to see a couple of interesting things here. As we look at 2019, the end of 2019, we see quite a sharp peak in terms of that inventory. If you think back to pre-COVID, over 2 years ago now, there was discussion, there was thought, there was speculation, no more than that really, that a housing correction might be on the way. And as such, many sellers put their home on the market, perhaps a lot of sellers put their home on the market. Buyers were a little bit reluctant to buy, thinking, well, perhaps home prices will be somewhat lower in 2020, so we'll be a little bit reluctant to kind of jump in the market. Hence the increase in those inventory levels. Along came COVID, which kind of put that right out of the ballpark, as it were. And what we saw, certainly in the Belmont market here, an increase in the overall inventory levels throughout 2020. But look what happened in 2021. Those inventory levels dropped quite dramatically, actually, and I'll have more information on that in a moment. So all of a sudden, buyers moved into the Belmont market in quite large numbers. Question there, although, is did we kind of get less listings and therefore the amount of inventory declined, or did we have increased buyer demand and therefore they bought the houses, bringing down the overall inventory levels? So let's take a look at home sales. Quite interesting this. As you can see, 15 was quite a peak year for the number of home sales, but then it kind of bounced along at about 140, 150. That was kind of the level that we were at within Belmont in terms of the number of homes that turned over year on year. Look what happened in 2021. We can see about a 20% rise there in the number of homes that sold. So that inventory level declined at the same time as the number of home sales rose. And so that declining inventory is caused by increased buyer demand as opposed to a reduction in the number of home sales. So strong buyer's market. We can get some validation of that too by looking at a couple of key metrics. First metric, days on the market, kind of a pretty key metric, as you can imagine. How long did it take for the homes to sell? The average in 2021 was down to 19 days, a relatively low number. You can get a little bit lower than that on aggregate, and some Arlington, for example, has a slightly lower number than that. But we're getting at about the level on aggregate anyway that you can't get that much lower. So clearly a very strong market, certainly strong sellers market, lots of buyers looking to move into those homes. The other metric we like to look at is the ratio of the sale price to the list price. So imagine a home comes on the market for $900,000 and it sells for $900,000. That's a 100% sale price to list price ratio. As you can see, dramatic rise really in 2021. Went from 100% in 2020 to 106% in 2021. So that's a dramatic rise. Similar to what we've seen in some other towns, we're going to talk a little bit about Winchester and Lexington in conjunction with Belmont, as those towns in many respects are very similar. Lexington was at 106 and Winchester somewhat depressed. It's kind of a different story for Winchester. But we've got a number here which is consistent with the Lexington market. Just for comparison, the very strong Arlington market, lower price point clearly, but that's a very strong market. That was at 109% in 2021. So 106 is still a very high number, given that it really has been around about that 100% for most of the last 10 years or so. So very high number. And again, indicative of a large number of buyers in the market. Even though we saw a lot more homes coming on the market, they were bought up very quickly and for an average about 106% of the list price. So strong sellers market clearly. With that strong demand, no surprise, house prices rise, and here's the average prices for the Arlington, sorry, I have my head on Arlington, the Belmont market. We're at about 1.5 million as the average. Been rising quite steadily since 2012. As I say, running at about 1.5 million. For comparison, and I kind of wrote these notes down before, Winchester at about 1.46, Lexington a little higher at 1.67. So it's right in the middle of those two towns. Those towns clearly adjacent to one another, very similar average price point. So it's interesting to compare some of the metrics between those towns to see how the towns are comparing to one another. Because at the same price, at the same average price point, you have a very similar set of buyers looking in those towns. If they're looking in Belmont, they're probably also looking in Winchester and Lexington, perhaps Cambridge as well, and you know, vice versa. If they're looking in Lexington, they're probably also considering the Belmont market. The challenge with the Belmont market is the low number of sales, and so for comparison, Belmont in the strong market of 2021 had 172 sales. Winchester was at 236 and Lexington was at 386. So it really has a lot less sales. And so as buyers are looking at these towns thinking, where do I start to look? It's very likely that if they include Belmont, they're probably including those other two towns just because it's hard to buy if there are only 172 sales in any given year. And so prudence says expand my search, not too far of course, like towns close to Boston, good public transport at about the same average price point. So that's why it makes sense to compare in some respects those three towns together and say buyers including not just Belmont in their search, but also including Winchester and Lexington at the same within their home search, just because of the low number of sales within the Belmont market. So average sale price is high. Same is true of the median sale price. That's running at 1.43. So you can see that house prices have risen quite dramatically really over the last 10 years or so, but also have risen quite steeply, certainly in terms of the median here, between 2020 and 2021 at the same time as the number of home sales rose too. It's interesting to look at the cumulative sales graph. And so what I've done here is I've looked at 2020 and 2021. The pink color, orangey pink color is 21. The blue color is 2020. And I've mapped not the week on week how many homes went under agreement. The reason I do that is it's about 6 weeks or so between a home going under agreement and actually selling. And so what I want to see, I want to back out, if you will, that delay, that lag, to see the rate at which homes sell, go under agreement, basically. And as you can see, 2020, relatively not too steep a curve. I could call it a flat curve, but it was actually somewhat flat in the early part of 2020 there. Rose slightly as we got to the second half of the year because sellers beginning to think, okay, if house prices are rising here, thinking about putting their homes on the market. And I'll talk a little more about that in a moment. As you can see, by the time we get to 2021, the number of home sales rose quite dramatically and carried on at those high numbers. And I think that flattening of the curve in early 2020 is some prudence on the part of the sellers in the Belmont market. But as we get to the second half of 2020, they can see houses selling, they can see houses selling for a high sale price, and therefore they're beginning to think about putting their homes on the market. As we get to 2021, COVID beginning to kind of come to the end of it, slowly but surely, confidence in the sellers, and more confident of the sellers bringing their homes on the market because they could see the buyers were out there. And that's why we saw a much higher number of home sales in 2021 than we saw in 2020, because of the confidence of sellers that there are buyers out there to buy my home. And guess what? House prices are also rising to the highest we've ever seen them, essentially. So that's really what's causing the large number of home sales and the sort of shape of this graph. What's interesting about this graph, though, we don't have in there the normal seasonality. If you look at the pink curve there, the normal seasonality of the spring market and the fall market is just not seen. It's kind of just spread evenly throughout the year, except perhaps for the very end, the kind of November timeframe. What we're looking for this year, early days as it's only early March, is are we going to return to the normal seasonality? Are we going to see the peak of homes coming on in the spring, slowing down in the summer, and then more homes coming on in that September-October timeframe, slowing off at the end of the year? We're not there yet. Certainly 2021 doesn't show that. Too early to say whether we'll get there. My guess is we probably will not. We are seeing it in some towns, that return to normality. Winchester's a good example. Has seen the large number of influx of buyers, that confidence in the buyer community coming in, And so it's beginning to return to normal in terms of seasonality. I don't think we'll see that in Belmont this year. We're not seeing it in the other town we're kind of considering here, which is Lexington. We're definitely not seeing that either. But let's get a few more months worth of data to see if that kind of does begin to play out. Because eventually, clearly, we will get back to that ordinary seasonality that we've come to expect over the last decade or more. So that's the single-family home market. Let me turn my attention now to the luxury market. As I mentioned before, we define luxury as over 2 million. Somewhat arbitrary number, but it kind of defines luxury to us anyway. And it's interesting to kind of track that again over the last decade or so. Here is the home sales. As you can see, relatively low numbers until we get to kind of 2017, 2018, 2019. It's not really high. Rose in 2020, but then a somewhat dramatic rise really in 2021. A large number of homes, luxury homes coming on the market. I should say that the blue are existing homes. The green are new construction. So that's how I kind of break that out. So the aggregate number here is 22, but there's kind of 18 existing homes and then 4 new construction selling in 2021. Again, interesting to compare this with those other two towns. Winchester, just checking my notes here, 31 luxury sales, and then Lexington at 100, so considerably higher. And here, the same comments I made around the buyers for luxury homes in Belmont, they are inevitably looking at towns around Cambridge, Winchester, Lexington, inevitably. There just aren't enough luxury sales for buyers with over $2 million within this market. They are forced to some extent to look wider just because it's just tough to buy when there are only 22 over $2 million sales. Having said that, the days on the market are really low. So there is a lot of popularity, a lot of demand, I should say, for homes within that price band. Remember, 19 for the market in general, 39 for over 2 million. Still a relatively low number. We would expect a slight increase. There are less buyers for over 2 million than there are below, of course, and so there isn't the competition kicking in to bring that number down so low. So 39 for the days on the market, and again slightly depressed on the sell price to list price ratio, but still a very high number of 104. That's higher than we would see in the surrounding towns for the luxury sales. And I think you can explain that if you look at the distribution. So in the next graph, what I've shown here is the distribution of sales prices for the last 4 years. And I've broken it by 2 to 2.5, 2.5 to 3, and over 3 million. Relatively flat, as you can see, if I kind of highlight it here. Relatively flat is 18, 19, 20, but a very steep rise in 2021. But the steep rise predominantly in that 2 to 2.5 million. That's where we went from 5 to 12, so more than doubled, of course. Over 2.5 to 3 went from 5 to 7, so a slight increase. And then the number of over 3 actually declined. And so we can see that predominantly the luxury sales are in that 2 to 2.5. So it's not surprising to see that sell price to list price ratio high at 104. If this had more sales at 2.5 to 3 and over 3, that ratio would correspondingly come down because there are less buyers, there is less competition as you get to those higher sell prices. So that's why the 104% we see for luxury is actually quite high in comparison to, for example, Lexington. Again, interesting to compare this, Belmont, Winchester, and Lexington. In terms of over 3 million, as you see, there are 3 homes over 3 million selling in 2021. Winchester was at 2. Lexington was at 19. So again, buyers with over $3 million to spend, not just restricting themselves to Belmont. Realistically, they're looking at Winchester, Lexington, Newton, Wellesley, Weston as well, of course. I mean, they have choice at that price point. Belmont has a very low number, so they are, as if buyers are really going to be spreading their kind of circumference much wider. Their radius much wider as they begin to look at, homes that can sell for over 3 million. So struggles a little bit once you get to the over 3 million mark with only three sales. So that's the luxury market. Let's take a little, quick look at what's happened over the last year or so, and I like to do that by looking at the sales distribution. What I'm showing here is the sale price distribution for 2020 and 2021. So if I kind of highlight the key areas here, as you can see in 2020, relatively low number of home sales below 900,000, and then between that 1 to 1.5, 65, and then 29 as you go 1.5 to 2, and then it kind of drops off if you get over. Again, even less home sales, under 900,000, so they're really not changing hands. That's a very low number. That's about 17 homes under $1 million. That's a very, very low number in terms of the number of home sales. But you can see a quite sharp rise from 65 to 81 in terms of the 1 to 1.5, and then 29 to 48, 52 in fact, as you look at 1.5 to 2. So the large increase we've seen has been in that 1 to 2 million price bracket, with less within the below the 900. So that, as you think about the average, beginning to skew that average just a little bit, we've got about 7% price appreciation based on the average, about a little bit higher when it comes to the median. So we're looking, I think, as we kind of factor in this shifting distribution too, somewhere around that 7 to 9% price appreciation. Not much higher than that, I think it's fair to say. I would scale back that median slightly because of this shift in distribution to the much higher price points. So that's the shift that you can see in 2020 versus 2021. More homes selling in those $1 to $2 million price bracket. So why is it? What's actually going on? So there's two things to consider as we think about what's happening in terms of driving the housing market. The first one is demographics. So we're seeing a shift in the demographics. And you can see it in this graph, which comes out of the Census Bureau, which is the number of people in each age bracket. And there are two areas which are really important. The top yellow bar are the baby boomers. Those are people who are now thinking of retirement and then therefore thinking of downsizing. So they're looking for a smaller, more affordable home, perhaps in Massachusetts, maybe further afield. And then the lower orange bar are the first-time home buyers. Those are buyers who are currently renting, looking to move into the housing market. And this is what's driving the market. Without COVID, and I'll talk about COVID or the after effects of COVID in a moment. Without COVID, this is the primary driver for the housing market. Baby boomers, downsizers moving out of the towns, specifically Belmont, Winchester, Lexington, for example, tend to have somewhat larger homes and therefore ripe for downsizers to kind of move out to a more affordable, smaller, therefore more affordable home. And then first-time home buyers coming in to buy into the town. So this is kind of what's the wheel, if you like, that's driving the housing market. But we have one other thing to consider, and that's really what's driving the kind of over and above this. That's the after effects of COVID, if you will. And we saw this really from the beginning, now 2 years ago, that there were changing housing demands. Just a very simple example, offices in homes. They were a nice to have 2 years ago, 3 years ago. Today they're becoming a required. Maybe not one, maybe two offices. Commute. Commute was always very important. Schools, commute were the two important factors, and then what you could buy for your money. Commute becoming less important because maybe I'm only going into the office 1 to 2 days a week, so it's okay to live a little bit further out from Boston. Schools are non-negotiable. They are homeowners always want high quality school systems. One, if they have children in the school system, of course, they're clearly focused on that. But also, even if they don't have children in the school systems, it does tend to be that you get higher price appreciation as the school rankings, ratings as the quality, if you will, of the schools is higher, those towns tended to have higher price appreciation. But the commute is now less of a concern. And so if you think about, if you kind of follow the Route 2 corridor out, if you think about a town like Acton, which always had a long commute, and therefore its price appreciation wasn't as high as closer in towns, like for instance Belmont. What we've seen as COVID is played out is that house price appreciation in Acton, for example, has risen quite steeply. Same with Westford, a little bit further out, but if I'm not that concerned with the commute, why don't I move a little further out? I can buy more for my money in Acton and Westford than I can in Winchester, Lexington or Belmont. And that's a choice that many home buyers are taking. And so that's kind of two examples, office and commute, two examples of changing housing demands. And this is layering on top of the existing wheels of the demographic change. Now, over time, of course, this will begin to diminish as everybody who look to change their housing houses have actually satisfied that requirement and actually moved to a new home. So we expect this to kind of tail off, if you will, as we kind of come out of this COVID and as these buyers who are looking for those different homes actually succeed in buying. Appears to be that this is a few years off, though. Looking at the number of buyers in the market, and certainly what we've seen in early 2022, there are a large number of buyers in the market now, and certainly a larger number than we saw previously back in 2019 and 18. And so this effect has not played out completely, that's for sure. Whether it will play out, whether it will continue in 23 and 2022, and then 2023, it'll begin to kind of tail off. Time will tell. But certainly as we look at the market today, and certainly the first half of 2022, this is the primary driver for the housing market. Buyers looking with those changing requirements, looking for a different type of home. So that's, so to say, the predominant effect today, with that underlying effect of the demographic shifts. Time will tell when this will sort of play out. 2022, second half, if then, probably more than likely 2023. So anticipate this to continue to be the primary driving factor in the housing market. Mortgage interest rates are kind of interesting. We hear a lot of talk. Interest rates are rising. I thought I'd show this graph. It's kind of an interesting one in that even though we are seeing rising mortgage rates, and that will have an impact on buyers' ability to borrow, ability to repay, if you will, it's still very much lower than it was even 3 or 4 years ago. And so we don't see mortgage rates, even if they were to rise, based on the predictions here. It'll be interesting to see what the current crisis in Ukraine brings into these numbers and its effect on inflation and so on. But right now we're looking at a number about 3.7 by the end of this year. So we'll see how that plays out. But it does look to be that it is going to be lower than we've seen historically. So not focus that much on the impact of mortgage interest rates, although time will tell to some extent where they end up in the second half of this year. So predictions. Where are we going to be? What's happening? So I kind of hinted at it before, and I like to take this to look at it from buyers and sellers' perspective. In terms of the number of buyers, there are a large number of buyers in the market today. Just for comparison, just as an example, we bought a home on the market priced at $600,000. We had 49 offers on that home. That's the highest number of offers we've had on any home for that matter. We've heard stories as well of that price point, lots and lots of offers, 30, 40, 50 offers on those homes. That says that there are an awful lot of buyers in the market today, and certainly higher numbers than we have seen previously. Thinking about those 49 buyers who made an offer on this home, 48 of them were unsuccessful. Even though we'll get more homes coming on the market as this year progresses, that's still a large number of buyers that will be looking to buy homes. So as best we can see, we think there will be a large number of buyers continuing throughout 2022. And it's likely they will not all be satisfied. They certainly weren't in 2021. They're still out there. And so it seems unlikely that those buyers will all buy a home over the course of 2022. So I anticipate a large number of buyers in the market throughout this year. In terms of the number of sellers, it varies very much by town. Thinking about Belmont here, a lot of people put their home on the market in 2021. To what extent were those buyers who had the option to put their home on the market and thought it was the right time to sell, or those extra people? Are those people still around? Are there still sellers sitting on the fence in terms of, well, it was a strong market in 2021. Should I now bring my home on the market in 2022? That's the big question for us, really. To what extent was 2021 the time when people who had the option to sell actually sold? And so we will return to the normal number of sellers in the market. I think it will be inflated over what we saw in 2020, similar to where we are in 2021. We're in 2021, but certainly not higher than 2021. That was a big jump here, say about a 20% increase in the number of home sales over 2020. I think it's likely we will see a number that is consistent with perhaps slightly lower than we saw in 2020 and 2021 in terms of the number of homes that come on the market. And therefore, with a large number of buyers, a high number of sellers, but not that high, price appreciation will continue to rise throughout 2022, that's for sure, as the buyers look to buy into the market. So that's our prediction for 2022, a very strong year, large number of buyers. Yes, I hate to say large number of sellers, but a large number of sellers, let me put it that way, but still not enough to satisfy the number of buyers there are in the market. So that's kind of where we see it today. We'll do this again in the middle of the year once we get a lot more information about what's happening in 2022. It's been early days. We really only have about two and a bit months, 2 months and 2 weeks really of information to look at. It's early days, especially as it's the early part of the year, but certainly by the middle of the year it become much clearer in terms of the number of buyers that are out there, although we have good information today that there are a lot of them. But how many sellers will be putting their houses on the market? That's the kind of unknown for us right now, and we're looking for some insight in terms of some data to where that will actually go. So that's our predictions for 2022, as we can see them today anyway. So thank you for this. I mean, why do we do this? We really do think, and this is really the tenet of MA Properties, we really do think that our client deserves to be the smartest person at the closing table. And once you're that, we all benefit from really becoming smarter about buying and selling. And that's why we do these live streams and market reviews. This is the sixth one we've done right now, sixth town we've covered over the course of 2022. And we'll be doing more over the next month or so as well, as we kind of recap on 2021 into 2022. So with that, I'm going to say thank you very much for watching. If you have any questions, please reach out to us. We would love to help you answer any questions you may have. A lot of information on the website too. So with that, I'll say thanks for watching our 2021-2022 market review for Belmont. Bye.